Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back, and we are going to get started with our analysis. So let's do this. Okay. All right. So let's talk about the euro dollar and what we're dealing with right now. So the euro is basically consolidating, and let's run with the assumption that well, first of all, we have a nice consolidation, right? We were just talking about this, and I think the risk is that we have a weak print. All right, I think that's the risk. Now, what is that going to mean for us as a trader? Well, you know, if we have a weak print, and let's go ahead and just remove this one for now. No, we should keep it. If we get a weak print, the dollar is going to be you know, probably weakened a little bit because the dollar's been weak anyway, and so you know, if the number comes in, you know, as a weak number, then people are going to be like, ah, screw it, you know, the dollar can't even bounce, I'm going to get out of it. So the question is, how far are we going to go? And my 2 cents is we're going to go see the 618 retracement, which comes in at 111.70. So we'll break higher like this, right? And then, you know, probably show a reversal. All right. Now, and like I said, I'm not very comfortable, and I don't think anybody should be very comfortable trying to chase the dollar lower at this point. I mean, it's fallen pretty aggressively, and you know, even if the euro rallies at this point, it rallies into new highs, relative strength is going to be divergent. So I wouldn't want to chase the euro into highs as RSI is diverging, and I know it's going to diverge if we hit new highs. I can tell you right now on a 4-hour basis. We'll do this. We're going to go up. We'll do a lower high in RSI, and then we'll turn lower like that. That's exactly what's going to happen, in my opinion. Okay. Again, I have no dollar position, so I have no skin in this game. I'm not going into today's data with any dollar positions. I'm just telling you how I think it's going to work. Now, on a strong number, the dollar may bounce, but you know, how far are we going to bounce? I mean, you know, the euro may pull back to 111 or 110.50, but if I was long the dollar, I would want out of my dollar longs. Okay, if you know, I mean, let me put it to you this way. I was short the Kiwi dollar last night. Okay, I'm not short anymore. I was short last night at like 73.32 or something. I shorted it like right at the close yesterday because I knew we had a nice resistance. We'll look at that chart here in a minute. I put in my bid at 73 or 72.80 last night. I didn't get hit. Now I'm not short. I covered it already. But if I was still short the Kiwi and we had a strong number, if I was going to stick around and wait for it, I would be like, all right, if we get down to, you know, if we drop 30, 40 pips from here, I'm going to get out. Now I'm not, but I'm just telling you that from you know, someone's perspective of who was long, you know, the dollar overnight, right? So if you're short the euro, like you know, Paul's short the euro, and he's like, yeah, you know, I'll get out on a dip. That's what most people are. Whoops, hold on. I'm going to sneeze. Hold on. Whew, hold on. Okay. Thank goodness I put on mute for you. Okay. Okay. So anyway, 111. Let's just 111.70 is resistance. Support 110. I think you guys get my drift. Why I think that you know, any dips are going to be very well supported. Any rallies, you're probably going to, you know, see sellers into it. Right now we are in a range, and you know, we're going into the channel highs. We're, you know, whether it's 111.70 or we, you know, if it's really bad, maybe we get up to 112. But even if we get up there, it's going to be in a channel resistance anyway. So I would just be, you know, looking to sell in a strength. Now, I got to stop here for a second and say, if you really want to short the euro, you know, if you think like, if you think Hillary Clinton's going to win, and it's like a, you know, there's no question in our mind, all right? Now, and I'm not in this camp, but I'm just telling you, if you think that Hillary Clinton's going to win and there's just no question in your mind, like no way Donald Trump's going to be able to pull this thing off, I want to be long dollars going into the election. If that's your stance, then I think that being short at 111.70 to 112 is the place you actually want to be short. Personally, that would be my thought. Again, I'm not in agreement with that. I actually think that Trump could pull something out of his hat, and I'm not. And what I think the biggest risk for Hillary Clinton is this weekend is WikiLeaks dump some massive whatever they're going to dump. They're just waiting for that last dump just before election night, and they're gonna unleash some real nasty stuff on her. And you know, the risk is then the dollar gets crushed if Donald Trump is elected. You know, that's the risk. So, but I think if you don't believe that, and if you think that Hillary Clinton's going to eventually win, doesn't matter, whatever, then you probably want to be short the euro dollar closer to here, close to this blue line. You know, 112 to 111.70. All right. And now, if you're on the flip side and you're like, I just really want to be short the dollar because I think Donald Trump's going to win, then you probably want to be a buyer of the euro down here, like 110 to 110.50. Again, those are my thoughts, and I'm telling you right now, I'm not going to have any dollar exposure going into the next couple of days, trading days. I'm not going into the election with dollar positions. I had considered buying the U.S. dollar Mexican peso, just as like a Trump, you know, kind of contingency plan, if you will. I was thinking about buying the dollar peso, but the dollar peso has not dipped to where I would feel comfortable buying it. Like, I'd like to see the dollar peso back at like 18.50, and then if we were down at 18.50, I'd be a buyer down there, but we're just nowhere close, so I'm not. I'm just going to end up leaving it alone. All right, let's go over to the cable. Now, the pound, the pound looks strong. Yesterday, okay, let's talk a little bit about yesterday. So the EU membership vote came out, and that is not going to prevent Brexit from happening. Okay, that is not. But what really kept the pound pretty bullish is the inflation report, and Mark Carney noting that inflation is starting to pick up in the UK. And I don't think it's a UK problem. I think inflation's picking up globally, just for what it's worth. But if inflation continues to creep higher because of this low currency environment, higher commodity price environment for the UK, they do have to eventually raise rates. So they might go from a cutting bias or a QE bias to maybe more of a they might stop doing quantitative easing, which is in essence tightening. So the pound is actually strengthening. Now, I don't know how much I would put into actually I've got a kind of a disaster of fibs here, so I'm going to remove some of this stuff. I don't know how how far the pound can go. I think the potential is limited. What I mean by that is I don't think the pound's going to 140, but I could see the pound squeezing towards 128, this previous support. Maybe if things get out of control with the dollar, you know, on a Donald Trump presidency, we could squeeze up to 135. I'm not long the cable. Well, I own pound Aussies right now, but I mean, as far as the pound dollar goes, I'm not long the pound dollar. But I think what can happen here is we can see a continued squeeze, especially on a weak jobs report. And if you look at the pound right now, it's squeezing up towards resistance. We're right at, think about all the stops that are building above 125 right now. Think about that, okay? So next stopping point, in my opinion, is 125.78. It's also a 38% retracement of the most recent fall, okay? Like, when I say recent fall, from up here to down here, 38% retracement comes in right at this 127% extension, which is 125.75. I think that's our stopping point for today on a weak jobs report. Okay. I'm putting us back in a range. Since we broke higher above 123.25 yesterday, I put us back into a range, which in my view could you know, take us back to here, moving forward, okay? Now, what takes the upside pressure off the cable right now is a dip back below 123.25, in my opinion. That's it. Excuse me 1 second, I'm gonna go drink my coffee. Okay. Sorry, you guys didn't need to hear all that. All right, where am I at? Dollar Swiss. Dollar Swiss is trading heavy. I mean, this thing. I'm a little concerned. Not the New Zealand Swiss. Dollar Swiss. Okay, I'm a little concerned with the dollar Swiss. I'm concerned with the fact that we had this false breakout right here, right there. I'm concerned about that false breakout up there. I'm concerned that we're at this fib confluence and we're just kind of holding it around this 97.15 level. So if we break below 97 cents, we should head back to 96, whatever this is, 96.15. So I'm going to write down 97 cents, guys. It is really key support. 97. It's really key support, okay? Hold on really fast. I'm long some Euro New Zealand and I'm thinking about taking it off the table. Hold on. All right, I'm not going to get exited just yet. Kiwi's too close to resistance for me to exit that just yet. I may regret that later, but that's okay. Dollar Swiss resistance. Sorry, let's go over to it. Dollar Swiss. So resistance right now. Yesterday, by the way, yesterday for resistance we wrote down 97.60. That's correct, right? Do you know what the high was yesterday? The high was 97.59 9/10 of a pip. I was off by 1/10 of a pip. Not bad for a free webinar, right? Not bad. Not bad at all. Yesterday, 97.60. So if we break above 97.60, that would cause a squeeze. I mean, then you in my opinion, we'd have a squeeze right up to 98.40. Not necessarily today. I'm just talking probably over the next couple of days we do something like that. But my fear is at this point is we've got it's hanging around these lows, and so if we crack this support here, we're going, you know, down here. Okay, that's and I have no Swiss exposure at this point, none. Hold on, I'm selling my Euro New Zealand. I'm out of that. Okay. I'm out of my Euro New Zealand log. Okay. Yeah, 1/10 of a pip, Ron. 1/10 of a pip. Beat that, Captain 2/10. See, Ron, who's also known as Desper in our chat room, that is, Ron is Captain 2/10, because he is consistently 2/10 of a pip off. And Jumbotron. Ooh. Jumbo. So anyway, that's just our chat room. Everybody's just kind of goofing around in there ahead of NFP. But jokes aside, though, this is good resistance. This is good support, and a breakthrough this support, I think, takes us to 96 and change. I think it's possible. Like I said, I think that today's number is going to be a weak print. All right. Here's the dollar yen. Now the dollar yen is at risk too. I have no yen exposure right now, but we've stopped at the 127% extension. You see this move right here? We stopped at it on a dime. That came in at 102.50. We came in at 102.54. So you know what that means? Oops, and this is range. That means if we break below 102.50, we are going to probably crap the bed in the dollar yen. We're going to do this. We break through here. All right, let's get rid of this one for now. We break through that. We are going to, start, falling fairly aggressively, I would think. Maybe even going into the elections. I don't know if we're going to get all the way down there, but I think that this is a trapdoor below here. We have to get back above 103.50 to take off the downside pressure. I have no yen exposure. I will reiterate. Okay. We are in a range. Dollar Canadian. You guys know the only thing that's holding up the dollar Canadian is this dollar weakness. We do have Canadian jobs report as well. Out of Canada today, we are looking for Canada to lose 10,000 jobs. Now, Canada's numbers have been exceptionally strong. Employment picture the last 2 months. I mean, last month was a blowout number. We were all looking around going, what the fudge sickle happened there, and how in the hell did Canada create, I don't know, it was like 50 or 60,000 jobs. Yeah, Canada has been notoriously beating the jobs picture for the last couple of months. So, and I for whatever reason can't figure out why either. But this trend line here, let's go over here. So this trend line has been capping prices, and I think it'll continue to cap prices. So, you know, we could eventually spike up towards 135. It's possible. But for right now, as far as Canada goes, the thing that's keeping the Canadian currency weak is crude. Crude looks like crap. Crude can bounce $1 or $2 and still look like crap for the week. So, you know, and then you got to think about it. If Donald Trump wins, Canadian currency is going to get walloped. Not as bad as the peso, but it's going to get walloped as we build a wall around all of the United States. You know, poor Hawaii is not even going to get back in. If you're in Hawaii, you're going to be ostracized. I mean, you know, and Canada, actually Canada might build a wall to keep us out. But anyway, we have 134.30, 133.50, and then hold on, 133.50, 134.30, and if that breaks, we should see 135 fairly quickly. Because you know, today is a risk, and we are bullish. Today is a risk of a double whammy for the Canadian too. I mean, we could have a strong U.S. jobs report, which I don't think we're going to have, but we could, let's say we create 180,000 jobs, and then Canada loses 40,000 jobs, and next thing you know, because we revert back to the mean with Canadian employment, next thing you know, the dollar Canadian is at 135, and we all look around and go, wow, I can't believe we're at 135. So there is that risk, and you know, there's also a double whammy on the downside. If we have a strong Canadian jobs report, which, you know, Canada's been beating those numbers, and we have a weak piece of data, we could break through this 133.50 and see 133 quickly too. So I'll put down 133 as well. Okay, all right. Let me see if I can squeeze out the Kiwi really quick. I'm going to squeeze out a Kiwi really quick. So Stan in our chat room, and somebody else yesterday also noted this, but Stan originally he said, hey, there's an AB equals CD. Somebody else on the Lunch Money webinar yesterday said the same thing, and I was looking at it yesterday, and I shorted the Kiwi at 130 or 73.32, I think. I closed it this morning about where we're at right now. I took, like, you know, 13, 14 pips out of it. I'm done. I don't have any short New Zealand dollar exposure right now. But the Kiwi's been holding up very well. And as I had, oh, and then one of the other things that we noted yesterday is relative strength was very divergent yesterday as we were hitting highs. We were hitting highs. RSI was divergent. Is actually the hourly. We were here yesterday. We were like, oh look, you know, we got the AB equals CD. RSI is divergent. That's going to be a good short. It actually rolled over. I'm sorry, we were here at highs, and RSI was divergent. I said, hey, it's probably going to, you know, roll over as RSI is now moderated. Now, in my opinion, though, as long as the Kiwi stays above here, I don't think anybody's really worried about their longs. Anybody who's long the Kiwi, okay? So while we trade above 72.75, you know, longs are not swayed. And here's the thing, we can extend gains. We're not too far from highs. And if we do, the 161% extension is at 73.60. It's also that old high from the head and shoulder pattern, right? So that's coming back into play. So look, if we rallied to 73.60, I think that's going to be very significant resistance. I might actually short the Kiwi up there if we get up there, all right? And like I said yesterday, we're back in a range. All right, folks, don't go anywhere. When I come back, we're going to continue on with our analysis. We've got the Aussie dollar index, Peso, Swedish Krona, Norwegian Krona, and then, you know, fun NFP Friday. So don't go anywhere. I'm going to go grab some more coffee. All right, back in a bit. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. We got to continue on with our analysis. And let's go into the Aussie. All right, so you know, the Aussie dollar, as you guys know, we're right up against resistance. It's right up against resistance, and I told you my fear about the Aussie right at this moment in time is more of the move that we're seeing in copper. With copper breaking higher, I'm fearful that the Aussie is going to actually break out. You know, we got inflation starting to creep up globally, and so this Aussie is getting real close to breaking higher, really close to breaking out. Now, I think we have resistance at 77.10 and 77.35, so those are going to be key. 77.10, and especially on a weak dollar print, okay? So 77.10, 77.30, we're in a range, but we're threatening to turn bullish, guys. I mean, if we close up in this neck of the woods, you know, especially once or if we get above 77.50, it's going to be really bullish. If we break above that, I'll tell you, I would not want to be short the Aussie if we break above that. Okay, just, you know, just keep a real close eye on it. Now, like I said earlier, risk reward wise, I should be short the Aussie right now. I should be shorting it right at this moment in time. But with everything happening, hold on really quick. Okay, sorry about that. So we have, you know, I feel like I should be short the Aussie right now. I'm just not. Just too much risk with the election risk and what have you. So for right now, I'm standing aside. Now, where does the Aussie start to roll over? So if you look at like this 4-hour chart, I think this pretty much sums it up for us, okay? While we trade above 76.60, the risk is an upside break. The risk is we break higher, okay? So we have to break below 76.60 in order to take this upside pressure off. That is key support. That is trendline support. It's key support right now, okay? Okay. Let's go over to the dollar index. So the dollar index has a bearish pennant set up. Bearish pennant. The risk is we break lower and we move down towards channel support, right? That's what it'd look like. That's the risk at this point with the dollar. And in my opinion, I think it looks very possible. All right. So a move below 97, because you can see we have this confluence right here, these fibs. A move below 97 would be very bearish for the dollar index. Like I said, I think that this is a weak NFP, my opinion. Okay. We have to get back above 97.60 to take off the downside pressure. Those might have been the numbers we wrote down yesterday. We're in a range. We're threatening to go to the lower end of our range of the uptrend. Okay. So we're threatening to come all the way back down here. Threatening. Dollar peso. I do not have any dollar peso exposure. So the peso. Now, I'm going to leave this one alone. I traded it long yesterday, got out of it this morning up here, bought it again after that poll came out, sold it really quick, and I'm done with it. But if we break through 1909, that would signal that we have a strong possibility of a Clinton win, or some serious risk appetite. All right. Now, at this point, you can see how significant this 825 level is. If we break above 825, that suggests that the market thinks that Donald Trump is going to pull ahead, or we have some serious risk aversion. Risk aversion didn't play a factor into the dollar peso yesterday. That was interesting. All right. US dollar Norwegian krona, still in this range. Now, if you don't know why it's in this range, I'll explain. Trend line. Paused on the trend line, bouncing off the trend line. I haven't traded the Norwegian krona long, surprisingly. I just haven't been comfortable trading the dollar on the long side the last couple of days, but you can see why it's holding. So the thing is if we break back below 816, that would be very bearish. Resistance is at 820. 822. Okay. And we are in a range there as well. Wow, look at this dollar Canadian's creeping higher. US dollar Swedish Krona. This sucks so bad. I played this. I played it perfectly, buying it, and I sold it like a pansy. I literally bought it like right here, and I sold it like right here. I mean, I nailed this stupid thing on entering. I wussied out because the dollar was so weak. Oh, what happened with crude just now? What the hell is going on with crude? Sorry. What happened with crude? Is some position squaring going on? Look at that bad boy. OPEC sources say Saudi Arabia has threatened to steeply raise oil output at meeting of OPEC experts last week after Iran refused to cap output. Whoops. That is very bearish crude. Wow. That is very bearish. Oh, good night, crude oil. Holy crudeness. Good night. You know, that's the thing. You guys can talk about them freezing, output, you know, whatever. Dude, you got all these OPEC members who all think they're king shit. Okay? Each and every one of them. Every single one of them, right? and they're all self-serving. You all know that, right? It's not like they're gonna, oh, let's collectively do a deal what's better for us. They'll say, oh yeah, we're gonna freeze output, but are they really actually gonna freeze? I mean, that's the whole conversation we've been having. It's like, no, of course they're not. They're gonna do what's best for them. And so, you know, you get Iran that says, well, why would I do that? Iran's been dragged through the gutters for like the last, you know, however long. Why are they going to cut? Why are they going to freeze? And Saudi Arabia says, well, fine, we're going to just raise output. We're going to crush you then. And they're all self-serving. No one cares about the cartel. They all care about themselves. You know, it's yeah. Problem is we live in a world that we live in a world with too much oil and no one wants it. No one's gonna want it. It's a dirty, dirty fuel, and the world's moving away from it. And every country that has gotten filthy rich over the last 100 years off of crude oil is gonna, you know, they're gonna find themselves awash in it. And everybody's going to try to pump more and more and more because they want to they want to, you know, continue to try to maintain standards of living, and you know, and money that's been coming in and margins and everything else. So they're just going to keep pumping. They're going to pump aggressively. Yeah, crude's toast, man. It is. That's been my argument for years. That's why when crude was at $100, I'm like, it's going down aggressively at 100. You guys know that from me for the last couple of years, back when we were at 110 and 120. But anyway, yeah, that's not good. Not good for crude. Um, let's see, where am I? What am I doing? Swedish Krona? Sorry, don't mean to get on a rant. Had to know what was happening there. Swedish Krona. So yeah, I traded this one like a complete sissy, pansy. But we know our battle lines, so that's good. If you guys want to short the US dollar Swedish krona, I don't think that's a good idea just because we're above breakout point, you know, on a weekly basis. You know what I mean? We're still above the breakout point, regardless of how weak it is at this very moment in time. But support is at 888, resistance at 9. I think those are the numbers we wrote down yesterday. How true are those numbers? 888. 9. That's massive resistance. This is massive support, and it's still bullish. While we trade above 888, it is bullish. It's at, you know, new multi-year highs. You know, all right. Claudio says, is that correct, or US dollar Mexican peso resistance? Uh, no, it's not. Thank you. 19. There we go. Okay. Your bias chart is finished. So, there you go.